All right, I'm going to take another look at gold today. We're getting close, I think, to a decision here. And I will say this, that this um, extended sideways churn has done its job. Most of the um, amateur, impatient, novice type traders have given up. These kind of traders just don't have the patience to wait for a setup. That's why these people rarely make money. They end up trying to force trades, and I saw a lot of this during this choppy phase here. I saw a lot of traders trying to force trades into this mess, and then they just get stopped out over and over. When gold doesn't break out of the consolidation. Um, and yeah, there's really nothing I can do to help these kind of people until they can get control of their emotions and learn some patience. Markets just move on their own time frame, and if you wait for the setups, then it's not that hard to make money in the stock market. But if you're um, gambler type mentality where you feel like you have to trade every day and you force trades into markets that aren't ready to move, then those kind of people typically um, and consistently lose money. So um, we're getting close. We Gold hasn't in a couple of bullish developments. So we've tagged 1800, but we haven't turned back down and headed down. So we haven't clearly started a at least a short-term decline. That's not that is not developing as of right now. As of right now, this looks like we're just building energy to break through 1800. So I'm not ready to pull the trigger just yet. I would really prefer to see a close over 1800. Um, but um, I've watched over and over as the banks continually attack gold every time it gets over 1800. But the buyers keep showing up, and I've said this before. I think there's probably uh, a consortium of hedge funds that have pooled their money together, so they're big enough to take on the banks. And when the banks run these attacks trying to take gold down, um, these funds or just the bulls, whatever it is, somebody's showing up and they're buying. So they're negating these attacks, and every time they do that, it becomes more and more dangerous for the banks to um, keep trying to artificially suppress gold. Their short position just gets bigger and bigger, and the risk of a big short squeeze and losing more billions and billions of dollars, which is what they've been consistently doing since the bottom in 2018, just gets greater and greater. So every one of these attacks on the metals is becoming more and more risky. So I'm going to show you the dollar chart here in just a minute, but if the dollar um, starts to crash here and we get a normal ICL, then gold is going to break through 1800, and when it does, it's almost certainly going to go to 1900. Um, so at this moment, anyway, I'm still kind of sitting on the sidelines. I'm not really ready to pull the trigger yet, but I'm getting close. And this is a bullish development here. The juniors have, at least marginally, broken out to a higher high. So they have negated that divergence. That was a bit of a concern for me. Often intermediate tops will form when miners and sometimes silver will not follow gold to a higher high, but that has been negated in the juniors. The juniors have now made a higher high. And then I've put the RSI on here, and I've noted this in some of my past videos. During the advancing phase of an intermediate cycle, price tends to stay overbought RSI tends to stay overbought, and corrective moves, when they get oversold, they tend to bounce quickly. And right now, the GDXJ anyway, this is still behaving as if it's in the advancing phase of an intermediate cycle. You can see none of these corrective moves were even strong enough to push the RSI down to oversold levels, so that's bullish. And now we're starting to embed in the overbought condition again, and like I said, that tends to be typical of the advancing phase of an intermediate cycle. You can see a really good example of it here. So overbought isn't necessarily a sell signal when you're in the advancing phase of an intermediate cycle, because overbought can embed in the overbought condition. It can stay overbought for a long period of time. So as of right now anyway, we've negated the divergence, and RSI is staying overbought, which is indicative of a market that is still in the advancing part of its intermediate cycle. And now I think this is the, the main thing that I'm watching right now. It's technically, it's way too early still. Well, not way too early, but it's too early really for this intermediate cycle to bottom. There needs to be one more complete daily cycle. And as of right now, this daily cycle is trying to roll over in a left translated fashion. And that would mean that price should break below this daily cycle low. And if it does, then it should come down and test this intermediate cycle low. And since this intermediate cycle is extremely left translated, it should break below this intermediate cycle low. Now, again, as I've said many times in the past, I'll never trade currencies. They're just they're the most heavily manipulated markets on the planet. The ECB will throw everything they have at this market to turn the euro back down and turn the dollar back up. So there's no guarantee that any of this is going to follow through. But if it does, if this daily cycle that is left translating plays out as it should break below this. It should come down, test this, and probably break below it. And when that happens, I think it's going to be almost impossible for the banks to keep gold suppressed in that kind of an environment. And I'll say this: if and when this support zone right here breaks, that should unleash a bloodbath phase in the dollar, and we would get our really scary final collapse into the intermediate cycle low, and this should be a yearly cycle low too, and it would also start a pattern of lower intermediate cycle lows, which would indicate that we're starting to move down into the 3-year cycle low. So breaking this support should unleash a bloodbath phase, and there's kind of a lot of air between here and this 3-year cycle low right here. So we could get a really severe drop in the dollar when this breaks. And the cycle pattern, the setup, it really should break. It should break below this, should test and break below this, and it should trigger a bloodbath phase with some kind of severe sell-off once this support breaks. But again, it's not something that you can really bank on, because there's just too much manipulation of the currency markets. But that's the pattern that's setting up as it is now, and so I guess I will assume the pattern will play out until I see some evidence that the ECB has aborted this pattern or stopped the ICL or something like that. Until I see some evidence of that, I'm going to just assume that this will play out, and that before this is done, this support is going to break, and we're going to get a scary move down into probably a yearly cycle low somewhere down in here. And if that happens, then gold is almost certainly going to go through 1800, and it's going to make a beeline to 1900. So we would still have some time left in that gold intermediate cycle. But again, I'm still kind of waiting for a break above 1800 before I make any trade. I'm not ready to jump the gun just yet. I'm willing to give it just a few more days and see if all the confirmations are in place before I take that trade. There's plenty of profit to be had between 1800 and 1900, especially in silver. As we've seen before, silver tends to have those really big moves in the last 2 or 3 weeks of an intermediate cycle. So, waiting a couple days for gold to maybe close above 1800, it doesn't mean that you're going to lose all that much potential gain, because silver could, I've seen silver move 15 or 20% in 2 or 3 weeks, so it's not out of the question.